Hey everybody, what's going on? It is James here with Crypto Common Sense, and in this video I'm going to do yet another trade tutorial. I'm also going to tackle one of the biggest reasons that people fail at trading and also fail financially in life. Before I jump into the content for this video, hit that thumbs up button, subscribe to the channel, and make sure you click that bell icon to get notifications when I release new updates. So I had made a post earlier on Facebook talking about how it's completely natural that anytime you start a new venture, you're going to be pretty bad at it. We all start at the same place, total ignorance of a subject. You take a look at somebody who's a famous artist, they probably started by drawing stick figures, and then you get better and better with time. And trading is no different. Technical analysis is no different. I can take pretty much any able-bodied person and I can teach them to be a successful trader, with the exception of one type of person. I cannot teach people to be traders when they are already resigned to defeat. When people have already accepted defeat, when they've already accepted that they can't do something, it's nearly impossible to change their mind. As the saying goes, you can lead a horse to water, but you cannot force them to drink. And that happened today with one of my subscribers. She convinced herself that she only had $400 to trade with, and it was simply not possible to, make any money trading. Well, that's not true. It's absolutely possible. And as I showed her, I had one student, just as an example, not saying it's normal because it's not, but I had one student in 2020 who put $5 into BNB with 100x leverage, and about 16 to 17 months later closed that position for a $21,000 payday. $5 into $21,000. So it doesn't take large amounts of money to make income, but more importantly, it doesn't take large amounts of money to learn. If you start with $400 as an example, you may not be making enough money to pay your bills, but you're learning. And as you learn and as you earn more, you can simply scale up. I started by trading $200. But some people think because they have money, they should start larger. You shouldn't. You should start small. I don't care how much money you have. But the bottom line is this: when you first start, you're going to be bad. That's just the way it works. And if you don't ever educate yourself or try to get new content or new knowledge, you will stay bad. That's just the reality of the situation. There's this weird idea that floats around the world that just because you have experience at something, you're better, right? Used to be that, oh, I want the guy that's got 30 years experience versus the guy that has 3 years experience. I don't care how much experience you have. I want to know who's better at their job. You might be a carpenter for 30 years and you might suck. You might have been doing carpentry for 3 years and you might be super passionate about it and be the best carpenter on earth. Well, trading's the same way. Just because you trade year after year, month after month, you might still be terrible at it. You have to expand your knowledge, and you've got to try new things, and you've got to learn new things. And then if you learn new things and implement those things, you will find out some of those things are going to work well for you, and some of those things are not going to work well for you. And you throw away the bad ones, you keep the good ones, and you keep building on that. For example, the last couple of videos I talked about Ethereum. I talked about this weekly demand box. I talked about how you will normally get some kind of reaction off of that box, and so that you can look for scalp positions, right? Box look like that. Well, let's zoom in. Looky, right? Just like I talked about in those last videos. You either get something like this, more downside. You get something like this, right? More upside. Or you'll get something where you consolidate. Either way, you almost always, when you have a zone like that, almost always get some kind of temporary rejection or a total rejection. And that means that when you zoom into smaller time frames, for example, 5-minute charts, we'll turn this off, then you can find short positions right there and scalp those, okay? Super important to understand how simple that really is. The other thing that you really need to understand about trading, I'm going to put an indicator on there real quick. Now, this is a brand new indicator that I just released yesterday, and I released it to all of my subscribers of my other indicators. They got this one as a bonus. So it's brand new, and in this video, it's not a pitch for it because I still got some coding and some tweaking to do before it's 100% where I want it to be. But I'm going to put it on the chart now just to kind of give you an idea here. Let's say that this thing kicked out these signals and you lost, let's say you're risking $500 per trade. just as a nice round number. You lost 500 bucks back here. You probably lost another 500 there. You probably lost another 500 there. Well, what happens with most people is they don't actually give systems a chance to work. And so, well, I've just lost 3 times in a row. That system sucks. I'm not using it anymore. And guess what? Then they miss this. And this one buy signal would have more than made up for those 3 losses. Might have put in 500 down here and made what? What did Ethereum actually do? Like 50x or something, right? Might have put in 500 down here and made 20 grand. I'm pretty sure you wouldn't care about losing 1,500 at that point. Look where the sell signal was, right near the top over here. Might have made a bunch of money on this drop, but you would have missed both of those if you gave up after the first 3. That's what people do with trading. They will learn something, use it a couple times. They might win twice, lose twice. They might lose 3 times in a row, whatever the case may be. Well, that doesn't work. That sucks. And they throw it to the side. Again, you cannot change somebody's mindset. You can teach them. You can show them how it's possible. You can show them other people who have done it, and they will still find a way to talk themselves out of success. And I used to see the same thing when I helped entrepreneurs build online businesses. Obviously, what I was talking about works, but some people took it, made millions. Some people took it and never made a dime. And I see the same thing with traders. It's the people who are wanting to go out there and just get it done, go out there and bite the bullet. They end up becoming very, very successful. And it's the people that are terrified of losing that never make it. And this is not, I'm not picking on anyone. I know that some people may think, oh, you're kind of beating some people up here, James. No, I'm not. Because the thing is I'm not a fan of victim mentality. I'm not a fan of making excuses. So I'm going to say that first. But I'm also going to say there is a legitimate reason that people operate this way. This is an evolutionary trait. Human beings evolved in such a way that we will go to greater lengths to avoid pain than we will to achieve gain. Now, I want you to think about this from an evolutionary standpoint. Back in the day, when we're running around with pointy sticks, avoiding pain might mean not dying, not being eaten by a wild animal, not getting an injury that was, unfixable, that would lead to death, so on and so forth. So when we evolved with a very strong root drive to avoid pain at all costs possible. We did not evolve with the drive to achieve great things, like gain. It's exciting, obviously some people are more motivated than others, et cetera, but it's not as evolutionary. I mean, gain is not near as good as avoiding that pain. And that's why there's a cliche that says people will stay the same until the pain of staying the same is greater than the pain of change. People will do almost anything to avoid pain. And so that's a really big problem with trading, because you can teach somebody a system like this, and this system, in this case, it would have won 2 out of the 5 trades. But because they're so worried about not losing any trades, they'll miss the last 2. And I did see a lot of this when I released my first indicator, where I would do these back tests and I would show people results that the system was getting. And, there would be, pairs that were running up for hundreds and even thousands of %. But then I would have a lot of people contacting me. Well, not a lot, but enough, like more than a couple, contacting me trying to suggest tweaks to the system that might make it lose less often. But what a lot of people don't understand is losing less often was fine, except it also meant that it would miss a lot of the big wins because it wasn't willing to take the risks. And of course, once I explained that, it made sense to those people, and they're like, oh, okay, I got it. I see what you're saying there, right? We don't want to avoid losing. We don't want to be afraid to lose. We don't want to trade in such a manner that we're terrified to lose. Same thing like if you're trying to start a business. If you try to start a business and your whole goal is not to go broke, well, I can almost guarantee you will go broke, right? You've got to set goals of making money, not avoiding losing money. It's like people who go into a relationship and they're so worried that the other person's going to cheat that they're, possessive. Well, what happens when you're possessive? You destroy a relationship, right? There's no trust there. And so you have to really be mindful of these things, because most people don't realize when they're operating out of this fearful mindset They don't realize that they're actually going through life avoiding pain versus actually chasing their dreams. And I know this sounds like a little bit of a woo-woo topic, but it's not. And when you operate in that mind space, you will hurt yourself in big, damaging ways. And so this is, an Ethereum chart again. The main lesson here is obviously, again, just a recap of that demand zone. When you break through demand, it flips the supply. You get those rejections like that. And also, it's probably a good time to just retouch on lumber again. I know that I've talked about this chart several times over the last couple of months, but I like lumber because it's not crypto, and everybody seems to think that crypto works differently from all these other markets and everything, and it simply doesn't. It's all the same. Once you learn technical analysis, you have the keys to the kingdom. And so back on June 14th, and you can go to social media and double check this to make sure I'm not pulling your leg. In fact, just to make this easier to talk about, this was the original post here, right here in this little window, right? I had said, hey, we're in the hodler soul crushing zone. Lumber's probably going to go down. And then in June, I said, hey, look, I reposted this saying, TA is TA. This is, exactly what we should have expected to happen. And then somebody commented, so, are you saying that I can expect to build a deck cheap in August or September? And I had said, look, counter trend bounce may be in the cards. We're pretty oversold right now. After that, we could see more downside. Boom. Literally June 14th, the exact bottom. Counter trend bounce, more downside. Okay. There's nothing special about me. This is just, I know everybody in this space, not everybody, but a lot of people in this space, they have these huge egos and they want to act like they're like the next Warren Buffett or like they have some magic voodoo that nobody else has. I have none of those things. I draw little lines on a chart. That's what I do. I use very basic tools that anybody can use with a little bit of education. I use Fibonacci levels. That's what this was. Hodler soul crushing zone is nothing but the area between the 61.8 and the 78.6. That's all it is. Big move down. A lot of times you get a counter trend bounce and then more downside. Down here, why did I think it was going to bounce? Because it was coming down here and retesting this old zone back here, just like what we just saw in Ethereum, right? It's normal to get a reaction off of that. And then I felt like there'd be more downside. Why? Because there's a trend line, right? Long-term trend line. Look, see that? You got a trend line that's way down here. So yes, it's very possible that lumber will eventually retest this trend line. These are, I often joke that, what do you do for a living, James? I draw lines on a chart. That's what I do. Okay. Also, the 200-month moving average is sitting down here. So that has been a good line in the sand. You can see on lumber going all the way back as far as the chart goes, right? It tends to come back down and hover around that 200-month moving average. We moved way off of it. So it makes sense that we would return to the mean, right? Return back down to that moving average. So these are not magical things. These are very, very simple concepts that you can learn. And when you learn them, that will give you an edge on the market. And if you have an edge on the market, it's just a matter of taking the trades. Yes, you're going to lose. You're going to lose a lot of trades. It doesn't matter. It only matters how much are you make after you take, say, 1,000 trades. Are you up or down? That's when you start looking at, is my system working or not working, or even maybe even 100 trades. But you can't take 5 trades or 10 trades or 20 trades and say this system is good or this system is bad. And I'm not talking about my system specifically. I'm talking about any system. You need enough data that you can say yes or no. Because you can flip a quarter 100 times and it might come up heads 80 times. But we all know that there's not an 80% chance that quarter is going to land on heads. We know that that's a fluke. Well, trading's the same way. You may run into a fluke where you get a bunch of losing trades in a row, even though your system is really, really good. And you may get into a spot where you have a really bad system and you win a couple of trades in a row and you get overconfident. The key is keep your emotions even keeled and make sure that you're not operating in a place of fear, running away from pain. Also make sure you're not operating in a place of FOMO where you're chasing gains illogically. You want to be using statistical edges. For example, lines of support, resistance, Fibonacci levels are really good. Divergences can be really helpful. Looking at candlesticks and understanding what a candlestick means, like, what's this wick mean? What's this tail mean? For example, if you're coming into a resistance level and you've got a big wick on top, well, that means that there was a lot of people sitting at that resistance level waiting to sell. That's a sign of weakness in the market. Or vice versa. You're coming down to a big area of support and suddenly a big tail gets left behind. Well, that means a whole lot of people are sitting down there waiting to buy. You might want to buy also, right? For example, look back here. This comes back down to this 200 moving average and boom, doesn't even get to it. And people are just buying it, buying it, buying it. Well, that's a sign of strength. That gives you a statistical edge. You know that statistically that's probably going to move up from there. And that's exactly what it did, right? Or you see a big wick like this. Well, that's screaming that there's way more selling than buying. You know it's probably going to move down from there. And that's exactly what it did. And you start putting all of these pieces together. And that's how you develop a system where you can win, 40, 50% of the time and win big, or even 30% of the time, but win really big. And that's how you become a professional trader. So hopefully everybody enjoyed this video. Again, even if you're not a trader, you can take something away from this, because I've been successful in many different areas of life, right? I was very, very successful in sales when I was employed by other companies. And the reason I was successful in sales is because I had a boss early on when I was 19 years old who trained me and taught me to look at it like this. For every no that I got, that was one step closer to a yes. And so I didn't really have any fear of being told no, because I knew that as long as I was doing a good job with my presentations, every no was one step closer to a yes. I ended up working for a company where I took over 35,000 sales calls, and I was told no thousands and thousands of times. Did not faze me, because every time I got told no, it was one step closer to a yes. Ended up being one of the top performers in that company in the entire country because of that mindset. Then I became self-employed. I built businesses for myself, and the same attitude applied. I went in there with the attitude that, there were going to be projects that failed. There were going to be projects that I didn't make any money on, but the projects that were successful would make me or break me, basically. And so, like when I was doing software for a living, sometimes I would spend, $5,000 or $10,000 on a software, and that software would bomb and I'd lose money. I even had one software that I spent, over $100,000 on, and it bombed and I lost a lot of money. But there were also other software projects that did so well that it didn't matter. And so that's how I approach business. I had other friends who got into different types of internet marketing, like friends who got into the t-shirt game. Some of you may know what I'm talking about. Some of you might not, but there were people that were selling t-shirts through these companies like Teespring. About 8 years ago now is when it got kind of popular. About 9 years ago, maybe. And like I had one friend who ended up doing over $10 million with that business. And he said that he expected that for every 20 shirts that he designed and launched, 19 of them would lose money, but he didn't care, because the 1 out of 20 that made money would make a lot of money. He'd have 19 shirts that lost money, and then he'd have one shirt that would make $50,000 or $60,000. And so his goal was to, he had a whole team of people working for him, and his goal was to try to launch 20 new shirt designs every single day. And that's how he built that business, right? And then when I got into trading, it was the same thing. I understand that I'm going to lose a lot of trades. Doesn't matter. I understand that a lot of the trades that I win, I'm going to win a very small amount of money. Doesn't matter, because on the trades that really win, the big winners, I'll make more in those couple of trades than most people make all year long. And I'm not saying that in a braggadocious way, like, oh, look at me, how special I am. I'm saying that's literally how most traders work. It's a couple trades a year that really make their year. Like last year, I had a couple trades that just those trades took care of me for the entire year. And that's really, what you have to understand about all this. It's just about having a statistical edge. If you knew that you could play the lottery, 50,000 times, and that you were probably going to win at least once, well, those would be, you would do that, right? You'd be willing to lose 49,999 times to win one time. Well, that's kind of what you got to think about with trading. By the way, with lotteries, that's not the case, obviously. You can play it every single time, every single drawing, every single lottery, and it doesn't really have a big impact on your chances of winning in the future. Every time they do a drawing, your chances start over. But yeah, I'll go ahead and wrap the video up there, because it's getting to be very, very long. But I hope you did enjoy this. I hope it might make you think. If you're somebody that does have a victim mindset, or if you're somebody that does sell yourself short, stop it. You can do this. And if you do need to further your education when it comes to trading, or if you'd like the benefit of having indicators that give you buy and sell signals, check the description for a link where you can join my trading classes. That comes with access to my Discord and also access to my proprietary trade indicators. As always, please remember, I am some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. This is James with Crypto Common Sense, reminding you to please trade safe. I'll see you in the next video.